Hello and welcome to Wealth Conversations. The last 2 years of the COVID pandemic, while distressful, have proved to be a boon for our pharma industry. The Nifty Pharma TRI has grown more than 16 times in the past 20 plus years. While many investors may have missed out on the pharma wave, here's an opportunity for them to make the most out of it. Today we are going to talk about Nippon India Nifty Pharma ETF. The NFO opened on 21st June and closes on 28th June 2021. To talk on the NFO, I have with me a very special guest, Mr. Hemen Uday Bhatia, Deputy Head ETF Business, Nippon India Mutual Fund. Welcome, Mr. Bhatia.
Thanks, Gitu, for inviting me for this interview.
Our pleasure, sir. So could you please give us an overview on the features of Nippon India Nifty Pharma ETF? What is the investment objective and the rationale behind the thematic ETF?
Yeah, sure. See, the Nippon India Pharma ETF is actually designed to track the Nifty Pharma Index. And Nifty Pharma Index consists of 10 constituents consisting of pharmaceutical stocks, which represent the Indian pharmaceutical sector in the index. And the objective of this fund is to give returns as close as possible to Nifty Pharma Index, obviously subject to expenses and tracking error. And the rationale behind launch of this fund is we at Nippon India, we endeavor to provide more and more choices to the investors in terms of providing more and more building blocks, logical building blocks. So if you see our overall product bouquet, we have our ETFs, we have some 22 ETFs spread across different asset classes, equity, fixed income, commodities. Within equities, we have 3 sector funds as of now, one on banking, one on IT, one on PSU banking sector. So this was the next logical step and next logical building block in terms of doing the, which will be helpful to the investors in doing their asset allocation. So our endeavor and our objective is to provide more and more choice to the investors in terms of offering newer products and logical products.
Mr. Bhatia, what are the constituents of this fund and the weightage of the companies in this ETF?
Yeah, see, as I said, this is a 10 stock index, and all are pharmaceutical stocks. The top weightage of the stock, one of the top weighted stock is Sun Pharmaceutical, having close to 20% weightage. Other than Sun Pharma, we have all the large pharma companies as part of the index. For example, say Dr. Reddy's, Divi's, Cipla, Lupin, Aurobindo Pharma, Biocon, Cadila, Torrent, and Elcam. So the top stock, which is Sun Pharma, has close to 20% weightage, and the bottom stock, which is your Elcam, has close to 3.5% weightage as of the end of May 2021.
Mr. Bhatia, don't you think that investing in a pharma ETF, as you said that Sun Pharma has a weightage of around 20%, it might pose concentration risk as the weightage of a selected few companies is very high?
To be honest, anybody investing in pharma sector specifically is actually taking a concentration risk. But let me give you a perspective here. Now, if you what we did was we have calculated the correlation of Nifty Pharma Index with broader markets. For example, represented by Nifty 50. So what we did was, over a period of 7 to 10 years, we took out 3 years rolling returns and saw what is the correlation between pharma and Nifty index. So if you see the correlation number, it is just 0.15 with Nifty, which we believe is relatively very low. Apart from Nifty 50, which represent the overall Indian markets, there are 2 more popular sectors which I believe a lot of investors will have in their portfolio. One is banking and another is IT. So if you compare the correlation of pharma with banking, the correlation is almost close to 0. If you take 3 years holding returns over the period which we have considered, and with reference to IT, the correlation is 0.26. which again we believe is quite relatively much lower. Generally, you get this kind of correlation while you invest in gold, or say you invest in international equities wherein you get the currency benefits, etc. But here you have a fund which is an Indian domestic fund and having such a low correlation. So actually, if an investor, while they are doing their own asset allocation, if they use this fund in the right context by allocating some percentage to of their portfolio to this fund, say 5 to 10%, then it is actually going to reduce their risk adjusted returns, because your correlation is low. Adding this fund is actually going to add return, but it is going to reduce your risk on at overall portfolio basis. So actually, if used in the correct manner and in the right weightages and in a tactful manner, it can actually help investor reduce the risk and achieve better risk adjusted return by adding a sectoral fund in their portfolio, which has given very good returns. At the same time, it's very low. It has very low correlation.
Mr. Bhatia, who all can invest in pharma ETF? I mean, what category of investors, and what is the minimum investment that should go into a ETF, buying this ETF?
All category of investors can invest in this, but especially retail and HNI category investors, they can actually do their asset allocation, and what I just said to you, basically they can actually use this fund as part of their overall asset allocation, and which will help them reduce risk and achieve better risk adjusted return. And from institutional investor perspective, a lot of institutional investors want to participate in the pharma sector. So for those kind of investors who have a certain view on the sector and want to take a naked call, they can use this ETF rather than buying individual stocks. So a lot of non-systemic risk get reduced if by investing in the basket of stocks. So this fund can be used by all category of investors, which we discussed. Minimum amount in the NFO is just 1,000 rupees, and on ongoing basis, given that this is the ETF, this is even going to be listed on the stock exchange. Their investor will be able to buy in lot size of 1 unit, and our pricing is generally is going to be around 1,000 of the Nifty Pharma index. So roughly it will be somewhere in mid tens. Is around that the pricing will come. It will all depend on at what rates we invest. And secondly, investors can even buy directly with the fund house. Given that this is the ETF, they can come directly to the fund house, but there the lot size is going to be 75,000 on ongoing basis. But in an NFO, it's just 1,000 rupees for any investor who wants to participate in this ETF.
Mr. Bhatia, what is the difference between a regular active pharma fund and a pharma ETF?
A regular active pharma fund is going to have a fund manager who based on his own research is going to choose the stocks, and the fund manager will assign weightages to the stock based on his or her own research. Whereas in this passive fund, so the objective of this fund is to keep tracking the underlying index, and the underlying index has constituents selected based on the market capitalization. And even the weightages of the stocks in the index are based on the free float. So higher the free float, higher will be the weightage of that stock in the index. So I can just say that while you are investing in a regular active fund, you are betting on the wisdom of that particular fund manager who is choosing those stocks. Whereas in a pharma fund, you are betting on the collective wisdom of all the market participants who are there in the market, and they are giving a fair price to this stock at which it is getting traded on the exchange, which ultimately which is used for calculating the market capitalization.
And can we say that pharma ETF is much less riskier than the pharma active fund?
A lot of non-systemic risk may get reduced, wherein you are not choosing stocks, or you are not giving weightages that which stock should be given higher weightage or lower weightage. So non-systemic risk obviously get reduced, but again at sector level, ultimately you are investing in a sector. So obviously the risk as compared to a diversified one will be relatively higher. But obviously, as compared to the active fund, I'll say a lot of non-systemic risk get reduced here.
So, pharma and healthcare sector has been under spotlight since the outbreak of the pandemic. How beneficial will it be for the investor who missed out on participating in the pharma story thus far to invest through this ETF?
Uh, See, if you see the movement of the pharma sector in last couple of years, I believe from last quarter of 2015, it started. There was a downtrend seen in the pharma sector, and the pharma sector bottomed out last year along with the overall market while this pandemic started somewhere in the month of March 2020. Since then, this sector has actually seen an uptick in line with the overall markets. And going further, also, we believe there are a lot of triggers. For example, the US exports have been stabilizing for a lot of these pharma companies. Even the exports to non-US countries is picking up quite well. Additionally, even the domestic sector has been performing. It is expected that it will perform quite well with induced spending towards the healthcare sector. So that is also going to add to the pharma earnings. So there are a lot of triggers overall for the pharma sector. So investors can actually participate in this. Who have missed to participate can actually participate via doing a systematic by investing systematically by doing a SIP and capturing the returns of the market. So one more additional point I would like to highlight here is that if you see the SIP returns of pharma sector from over last 21 years, from 2000 to 2021, it has given a SIP return XIRR of close to 14.5%, which we believe is quite encouraging. So investors who have missed out can start participating now, but in a systematic by investing systematically and not taking any lump sum call unless they have a view that they want to participate and invest, do a lump sum investment.
That was my next question, Mr. Bhatia. What is more? Is it beneficial to invest in lump sum, or SIPs is more beneficial in the long run?
Yeah, see, as I said, given that this is a ETF. First of all, the AMC will not be able to offer SIP directly to the investor. Investors can avail SIP facility via their stockbrokers through whom they are trading, with whom they have their account. So all the stockbrokers who offer stock SIP facility also offer SIP facility in ETFs, so they can participate by using the SIP facility of the stockbroker. And we suggest doing SIP over lump sum unless, as I said, investor has a view, very strong view that from here on they will just see the upside and they want to do a tactical play. For investors who want to use this ETF as part of their overall asset allocation, we believe a SIP structure should be used, and it will help investor participate in the upside as well as downside of the sector in the coming year.
Thank you, Mr. Bhatia, for your time. It was a pleasure speaking with you, and such a precious input that you gave on Nippon India Nifty Pharma ETF. Thank you so much.
Thanks.